What's going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to go through some updates of what I'm looking at in the market, what stocks are reporting earnings, and what stocks are going up and what stocks are going down. So the first one we're going to look at here is Amazon. As you can see, Amazon is a pretty big portion of my portfolio, although I bought into this stock way too soon at $150 a share. So I'm down about 9%. Still waiting for it to get back to the break-even point. But Amazon did report very good earnings. There's lots of new news in there. Their EPS came in at 65 cents a share versus 35 cents expected, which is a giant beat. And then revenue is $134 billion for the quarter versus $131 billion. Amazon Web Services also beat expectations and their advertising. So if we look at the news for Amazon, we're going to see that there's a couple things. It looks like they are struggling with their grocery store business. Okay, that's one of the things up here. Let's just put in Amazon. So that was the other thing. Then it said they're investing $7 billion into Israel. But overall, it's Amazon. They have great numbers. They're doing huge, $130 billion of revenue in a quarter. So this one, I'm just pretty much just waiting for it to get back to $150 a share. I mean, I'm confident it will happen. It might just take a couple weeks to get there. The next one on our list is going to be Airbnb. So this is one I sold out of this as it approached between like $140 to $150 a share. I sold out of my position. So I pretty much sold at the peak, which was really good with this one. I sold it right about 150. And then today it's down about, 4%. This week it's down about 8%. So it's slowly coming back down. I think it's going to come back down to about 125. That's around the point I would like to buy back in at. So when that happens, I will happily start slowly buying back into Airbnb. There is a chance it goes back down to like, $100 or $110. So at about 120, I'm going to start buying in slowly. But long term, I love Airbnb. If we look at the numbers they did, we are going to see their nights and experiences booked in the second quarter increased by about 11%, which missed analyst expectations, although their EPS was 98 cents a share versus 78 cents expected. Revenue of 2.48 billion versus 2.42 billion. The revenue is up 18% year over year. So that's a strong number. That's strong. Net income is $650 million compared with 379 in the prior year. That's also huge growth too. So they did very good there. We got $19 billion of gross booking value, which was up 12% from the second quarter of last year. And 115 million nights and experiences booked. Other than that, I would say, let's see, guidance Airbnb called for $3.3 billion in third quarter revenue, or 14 to 18% growth. And analysts were looking for 3.2, so that's good. So you would think the stock would go up, right? But it doesn't because it was priced so high. Airbnb trades at such a high valuation, PE ratio of 48. So I mean, this is the company's valued at $88 billion. The valuation is very rich on this. That's why it's not shooting up to like $200 or something. It's because it's such a high priced stock. But that's like where it typically trades. So when it comes back down, then I'll be interested in buying back in. So the next one on our list is going to be, what is this? Airbnb wants to refine its service using OpenAI's GPT-4 large language model, a form of AI software that can compose realistic text, blah, blah, blah. And there's still people complaining about the fees on Airbnb. That's something that's been going on for a while. It looks like that's still a struggle for them. Airbnb forecasts revenue above estimates on rebound in international travel. I saw another statistic today that says that Americans are traveling so much more to European countries than they are in America. So that's another interesting, stat out there that is going to affect their business. Airbnb results beat expectations, travel rebound, but stock falls after running high this year. Okay, the third one on my list I want to point out is Etsy. Etsy is falling a lot. Okay, today it's down over 13.5%. And so the stock's $83. We're looking at a market cap of $10 billion, which I think is a lot. That's a lot. But if you look at the stock chart, this is actually we're on the low end of where this this company normally trades. So that's just where this company likes to trade. Now, they only grew revenue, or their numbers were only up about 7%. And for the next quarter, it's expected, or next quarter or next year, it's expected to be about 10%. So it's not like this is some super fast growing company that grows at 25% or something. Maybe it definitely was probably during the COVID era, but not anymore. And a lot of that growth is coming, that growth is going away, and they're losing some users. Even the sellers are getting kind of mad. I saw an article about them possibly going on strike because of the fees that Etsy has, and Etsy also was holding, payments, so the sellers couldn't get their money, stuff like that. But Etsy they own it. They sold one business to a Brazilian company last year. I forgot what it's called. So that, I guess you can look at that as a good thing because they got rid of that. But they also have Reverb, which is for musicians, and I think they have Depop, which is another fashion resellers app. So I think they had 91 million users. So I like Etsy. I think Etsy is a pretty large, it's a large enough marketplace with a unique kind of, the products they sell on there are different, right? They have a certain brand that you think, if you're looking for certain products, you might find them only on Etsy, and it's different than an eBay or an Amazon or a Walmart, something like that. Etsy has a lot more handmade things, and it's just, I think it's something that's a little bit different and unique from other retailers or e-commerce stores. So that's why I like it. Now, how I said, the valuation does look high for a company that only does maybe $1 billion. I think they only do a couple $100 million of earnings and maybe $1 billion or $2 billion of revenue. So it seems like a lot from that metric. But if you look at the stock chart, I mean, this stock was $150, and a lot of time it's been trading at, over $100 a share. So I think this is we're looking at a 1-year low right now. So I think this is a good chance to start buying shares. It's possible. Let's see. I think it was actually lower. Yeah, it was $81 a share. So we're pretty much at a 1-year low. If it keeps falling down, especially below $80, then I'd be really interested in buying more shares. But over the next couple of days, next couple of weeks, I'll probably just slowly buy shares into Etsy. I think this is a good good opportunity for that. So those are the stocks I'm looking at right now. If we go to Etsy's EPS, or their earnings, they beat Q2 EPS 45 cents, a beat by only 2 cents. So a slight beat. Revenue only up 7% year over year, which was also a beat of about 11 million. So so they're doing 600 million in a quarter, which means maybe they're doing $2 billion, or $2 billion to approaching $3 billion of revenue in a given year, and the company's valued at 10 billion. So that's the only thing. It's kind of a lot. It trades at quite a premium for a company that only grows at 7%. But I mean, does that mean the stock is, should be cut in half right now and it should be a $40 or $50 stock? I don't know if that's realistic. I don't know. It's possible, but I don't know if I see that happening. That would have to be like an end of the world scenario for this company. So we got what their outlook was: 2.95 billion to 3 billion, revenue of 610 to 645, and the shares are still down. So those are my thoughts on that. The other one I've been buying the last couple of days is Cracker Barrel stock, just because this stock normally likes to bottom at about $90 and then shoot up to like 120. So see, it bottomed here at 90, bottomed here at 94. Then it's been at this 90 for quite a while now. Let's see what else we got. So that's the way I'm looking at Cracker Barrel. I think Cracker Barrel is a lot of people like their food. They have good locations and pays a strong dividend. The EPS is expected to come back pretty strong over the next 1 to 2 years. They're only growing revenue at 4 to 5%, but the real thing to look out for here is the EPS. Profitability is more important. So that's what I'm looking at. Those are the companies I'm looking at. And thank you for watching. If you guys have any stocks you want me to do analysis on, let me know. Comment down below.